Hey, here's Diver again. Going to do one on Elliott Waves as a quick interlude to parts 2 and 3. I'm going to work on parts 3, but this one on the Elliott Wave because I'm getting a lot of questions on Twitter and on Discord. So I'm going to do that next, and it's going to be short and quick. So look, I'm going to show you a simple way, and this is just me. I just continue to do everything as simply as I can. I don't have a chart which gives you lots of lines and everything that tells you where you are on the Elliott wave. I do the calculations myself. And why do I do that? I do it because it's just more intuitive when you do it yourself with formulas. So I got a spreadsheet up here. This spreadsheet I've been using for years and years and years. It's a simple Elliott wave spreadsheet. It's as easy as you can get. So I'm going to go through the spreadsheet. You can create one. If you don't know how to do a spreadsheet, then get on Twitter and follow me on DiverSK, and I will give you the formulas or I'll send you the spreadsheet or whatever. It's simple. Okay, so I'm going to go through it one by one. This is on AMC. So it's how I originally set it up, and I've been just working it for now 8 to 10 months, however long. 10 months now. God, it's forever. But when you're selling options, you don't really care because I made $4,000 this month selling options, and I will just keep going on and on and on until whatever happens. So first of all, I'm going to show you, this is a spreadsheet sheet of many. If you look at the bottom, this is how I live my life. I have it. My kids' grades are on this little, sheet. This is what I need to be doing, the next week, my work schedule, blah, 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 blah. So, my whole life is run by a spreadsheet. And on the spreadsheet, I have, chart, which tells me all about the Elliott wave. So I'm going to show you how I've set this up, years and years ago. And I've been using it as a reference. And so when you go down to the bottom of this, here is the Elliott wave theory. Well, it's not so easy to see because I'll have it too big. So on my spreadsheet, I have pasted something out of, Google or whatever on all of the little chart patterns. You can do this. Go to Google, search for, a chart pattern picture, and you get shit like this. It's so easy. Everything you need to know about chart patterns. Not quite all of them are on here though. There are quite a few other ones, and maybe at some point I'll give you a book that I have from 20 some years ago that tells you everything you need to know about the stock market, technical analysis, and the history of the stock market, which is very important if you want to live through market crashes. So anyway, here's the chart patterns. It's so easy. You look at the patterns, compare them to what you got right now, and there you can see, what may happen. May happen. That's critical. All right, now we go to the Elliott wave. And I'm going to try to do this fairly quickly because you can go on the internet and you can find everything you need to know about the Elliott wave. But I'm going to try to keep it simple for those beginners who just need to have a basic understanding. Okay, so here is how the chart looks at the beginning of a bull run. You have, you're at a double bottom. Let's see how we get here. You have waves, first wave up, second wave down. These are capital letters too. And this, this chart is somewhere on the internet. I don't know. I got it somewhere 20 years ago or 15 years ago. I don't know. Off the internet. 1, 2, 3 capital letters. 4, 5. Okay. This is an upward movement of the Elliott wave. Okay. Then you got little simple waves. 1, 2, 3, 4, 5. How hard is that? 1, 2, 3, 4, 5. Up wave 1. A, B, C, down. And here's a critical point. On the third wave, which is the big run, and this is where we should be in AMC right now. On the big run, you have 1, 2, 1, 2, 1, 2. And so why do we say 1, 2, 1, 2, 1, 2? 1, 2, 1, 2, 1, 2 is where the news is negative. Where are we at right now with AMC? Negative news. They're always beating the shit out of it. The fucking goddamn news and mainstream media is always beating the shit out of AMC, but not always. Now today, on the day I'm recording this, this is October 29th, CNBC came out with a positive news report. So maybe things are changing. So we have 1, 2, 1, 2, 1, 2 waves. There's, so many iterations of the Elliott wave that you'll see on Reddit and on Twitter about all of these, monstrous software iterations of how it comes out. But it's simply 1, 2, 1, 2, 1, 2. One's up, 2 down. 1 up, 2 down. 1 up, 2 down. Okay? That's simple. All right? That's how it works. Then you get to wave. Look here. Sentiment now bullish. 3, 4. Now we're going to call them 3, 4. It's just a fucking number. 3, 4. 3, 4. 3, 4. And now we're at the top of the wave 3. Look here. It says powerful wave 3. Strength and breadth are at maximum, corresponding to good fundamentals. Do we have good fundamentals in AMC? I don't think so. But Adam Aaron is telling us we're going to get there. So I believe we will. I believe that I bought the stock because I believe it's a cash cow once the restaurant business and the drink business and the movie business gets going. So I believe in the fundamentals. So anyway, at this stage, the trend is considered to be up and unstoppable. We're not there yet. So wave 3 is never the shortest and has the greatest chance of extension. So where are we right now? I don't know. We're somewhere in here because the mainstream media is still negative. Fundamentals are still so-so. We're hoping that the next earnings report is going to be positive. So this is where we're at right now. Okay, so, there's certain rules here. Things like wave 2 is less than wave 1. Unbreakable rules, okay? That there is no overlap between the top of wave 1 and so and so and so. So I'm not going to go into those details on here. I'm only going to say that there are rules and things like that. But fundamentally, you need to try to figure out which wave we're in and things like this. And I want to give you just a general chart pattern. So we get to wave 3, then there's wave 4, disappointment. Wave 5 hits the peak, and then there's the big ABC that you hear about on the way to the next crash. Okay, so what is it all based on? This is simple stuff. Okay, all of this is simply based on Fibonacci numbers. Wave 2 retraces wave 1 to less than 61.8%. Wave 3 extends wave 1 by 1.618%. Okay, this is all percentages. So the only reason I'm showing you all this shit, because you can get this off the internet anywhere, you just simply study the Elliott wave and don't make it harder than it seems. I like to keep things simple. This is DiverSK. Simple. Make money simple. 20 years of simply making money. Okay? And AMC, again, I'll say this since part 1, and it's going to be on part 2 and part 3. AMC provides the simplest, best money-making machine that you can get in options trading. So, all right. So this is the Elliott wave theory in simple terms of 1, 2, 3, 4, 5. That's the waves. Okay, now let me show you how I set up a spreadsheet for that. Here's my master. Blah, 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 blah. Okay, we don't care about that just yet. Now let's go up and look at AMC. This has been going on for me since January. Now I bring up the screenshot. Okay, here's a screenshot. This was changed actually today. And this is the reason why I want to do this video before I do part 3, because today is really good evidence of how Elliott Wave works. And today is October 29th, I think. Anyway, I set up a simple spreadsheet so that you could track your stocks as you trade them. Okay? And some people who follow me on Twitter and some people who are in Discords that I'm in, they're going to see that this is how I do it. And I just want to show this because it's so simple. Now, the reason I did this screenshot here is because prior to today, this is what my screenshot looked like. And that's where you see all these yellow lines. When you're trying to work out where we are on the Elliott wave, you have to work that out because the chart's changing, the prices change, you have a top, you have a bottom, you have various scenarios that could be until they play out, until they happen. You don't know for sure where you are in the Elliott wave. Okay, so until you really analyze the charts and the price movements, you're not going to know exactly where you are. So here's where I was, prior to today, when I made a very nice trade within 1 penny of the bottom. So this is the reason I'm doing it. So I had this 34.52 analyzed, and I was still thinking 35.54, maybe 34.52, blah, 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 blah. October 29th. We hit 34.53, and boom, I had it. And I closed out some covered calls just minutes before this happened. And I did it because my little chart here. I was like, oh shit, it's hitting 34. It's really close to 34.52. I better get the fuck out of those calls. I sold the calls, not buying calls, sold the calls. So when you sell them, you want to get out of them before it turns. And so I got out of them within 5 minutes before this turned. To me, it was one of the best trades I've made for a while. So anyway, I just wanted to show you, this is how I'm working on it. You see yellow and blue. I'm keeping track of where we are at the current moment. So let's get rid of that screenshot. Now we go to live. This is my current screenshot, and I changed it because here we are today. We hit 34.53. Actually, I should bring that up. Let's have a look at that. We're right now, I'm doing this video live. We're at 35.37. We're in extra hours now. Jesus, it's already late for me. I'm in Germany, so I should be sleepy now. Anyway, we're at 35.37. So let's go at the chart. Let's look at the day today. Here we are, today's chart. So I did this. Here we are around 10:30. What's the price? I'm going to say low 34.60, 34.57, 34.53 right there, about that was the low at that moment. Okay. Then I will show you I did this screenshot. This is in Theta Gang chat, Merc Trades. Here we go. Today, 5:14 p.m., that's German time. AMC exit. I exited my 3 times covered calls at 36 for October 29th at 9 cents, and I made 363% yield on those 3 calls. Okay, the reason I want to show you this, because this was at 5:14 p.m., and then you go over here somewhere, and 5:14, I'm 6 hours ahead of you. Okay, 514 would have been 11, 12, 14 right there. I closed those calls out right there based on the Elliott wave. And regretfully to say, if I was paying a lot of attention, I probably would have done it back here. But I wasn't paying any attention, and I noticed that, wow, we're at 34 something, and I got nervous. So I quickly checked my to-do list, which is my Elliott wave theory, and then I saw this, and I go, shit, I got to get out of those calls. So I got out of those covered calls, not purchase calls, sold calls. I got out of those right away, and that was really cool. So that's just to show you that I did it. All right, so we get rid of that. Now we get on to how I do this shit. Okay, it's really, I have notes to myself so I don't ever forget. There's 89 melody, 55 corrective, second wave is usually blah, 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 blah. Okay, the reason I have this to myself is because I copied this off the internet. You can get all this shit off the internet, okay? So you don't need to worry about that. It's simply set up a spreadsheet. We go bottom, top. All right, so in AMC, the reason I put blue lines here is because that's a confirmed move now. If this was the original move, we were at 218 and it went to 62.55, okay? The move, this is the amount it moved. Let me give you the formulas. There's 218, I entered it, 62.55, okay? Can you do this in advance? No, you have to wait till the whole move is complete. So all these people who tell you all the shit that they can forecast and everything else, you have to wait until some moves are actually fully complete before you can figure out what happens. Okay, so the move, this is just the difference. B5 minus A5, 60.37. So that was the move. Now, all you have to do, here's the simple fib numbers. I call them short fib numbers, Fibonacci numbers. Okay, you got to retrace 78.6, retrace 0.62, retrace 38, retrace 23, advance 23, advance 38, advance 62, and advance 78.6. Okay, I base my moves on a chart. Let's pull up a chart just to be sure. In other words, if I base my Elliott wave move, if it's a short-term move, the high must be higher, the low must be higher, the high must be higher, the low must be higher, and the high must be higher, and the low must be higher. Okay, so this would be one Elliott move that I could track. All right, and then I could tell you approximately how much that retracement would be. And that would hold true until the pattern was broken, right? Everybody who tells you all about this bullshit of, I can tell you what's going to happen, it only works until the pattern is broken. So when the pattern is broken, forget about it. Just saying, as I always say on Twitter, just saying. It's really simple shit. So now I take this and I say I have my original basic move. And look what all I can possibly predict from that. Okay, we got retracements, we got advancements, blah, blah, blah. Okay, then I start tracking wave one. And where is that wave one? We go back to the Elliott wave. Here's wave one. You can go to the internet and get a description of wave one. It's the big wave. You got 1, 2, 3, 4, 5. But it's the capital I, or capital 1, or the Roman numeral 1, 2. That's what I call, when I tweet on my Twitter account, I'm going 1, 1, or 1A, or 1B, blah, blah, blah. Because I just use this particular one, general wave structure. Yeah. So, that's it's fundamentally create a spreadsheet that tells you what the retracement is and the next retracement, and you see the formulas. 0.62 times C5. If you don't know how to use a spreadsheet, then you simply need to tweet me, and I'll give you, it's really easy once you figure out how to do the formulas. So most people, I shouldn't say most, but a lot of people have a general idea how to use spreadsheets. Okay, then what do you do next? So you got this set up, advances and retracements. So you simply start going to the chart. Let's back to the chart. Okay, let's put it on 1 year. There they are. Well, of course, I have all my little numbers drawn on there and all that shit. So, you have these original moves. You have to find the low somewhere in here and the high. And this gets to be, this is in June. So you have the original low and the original high. And then you have to ask yourself, does all of this shit fit into Elliott Wave 1? Well, that's not so easy to determine. So, you have all this shit going on, and then you have this jump, and then you have this shit going on. But some of this features don't really fit into what would happen with Wave 1. So, I simply look at the macro view, which would say, put all of this into Wave 1. Now we're into Wave 2, and possibly starting into Wave 3. Maybe this was the start of Wave 3. So we say 1, 2, 3. Okay? But this is only the beginning of Wave 3 because this Wave 3 is consolidating. We're still consolidating. We have, I don't know what the hell really is going on right now. We have to watch this because it could retrace here and it would still be okay. We would still be consolidating. So this is all technical analysis. This is beyond the scope of this video. I'll just make sure that's clear. I'm not trying to teach an entire course on technical analysis. I want to stick to Elliott waves. Okay? Okay, Diver again. Hey, I got to edit this in real quick because I'm not very clear in part of the video we shot earlier. So this is an edit stuck in the middle of the video. So anyway, just to clarify what you do within the spreadsheet on a day-to-day basis. Okay, I use the spreadsheet like in this area. So before any of this is done, I'm working down in here as an in process, working out where we are. So for example, if I'm charting on a day-to-day basis, I simply am looking at what's going on here. So before we got to this first move of 2 something to 20 something and then all the way to 60 something, I'm working in this area trying to make these other numbers work. So what I'm doing is I may put an interim price in here. Okay, back to the chart. If I'm working on a day-to-day basis, so this is just Monday, and we made the video earlier. That ain't gonna work. So if I wanted to say this period, and I wanted to track an upward move, find an upward move. So maybe I'm going down here, and this bottom is 36.12, and this top is around 43.63. So, actually I did this. So this was one of the ones I still have left in there where I was working this out, 36.12 to 44. Okay, so all you're doing before you get to the final numbers, you're just working it down in this area. And all you have to do is put the number in the bottom for a bottom and the number in the top until the entire move is played out. And then I lock it in blue. So that hopefully that makes a little bit more sense. You can also do the next phase, which is a top to bottom. I simply just do it backwards. Then you get the backwards numbers. Same retracements and advancements. For example, if we break 34.53 now, we may continue to go down. So these are just the predictions of what happens if you advance in a downward move. So you can use this vice versa, whether you're going up or down. The only point I'm trying to make is that you are working this however short a period you want. You can use this same spreadsheet on an intraday. Let's say in an intraday move, you're at 36 and you go to 38 or 39. Okay, and then here you are. You have all of the retracements and all of the advancements for that particular move. Okay, so you can do day trading off of this and everything else. And this is what these guys, Trey and Dave and all the people on YouTube, they're doing this. They're much better at it than I am. So I don't want to take any credit away from them because they have very sophisticated systems. My purpose behind doing this is to show you simple ways to do it so that when you become overwhelmed with these complex trading platforms, this is just too much. And I'm here to show you that you don't really need all that stuff. You can do it yourself, and it does help you to get more engaged. So for me, it's important that you learn how to understand bottoms and tops. And when you try to finally fit the entire wave one, now it's locked in because you get all of the entire wave one moves. You'll get all of the advancements on wave one. We're currently working on wave three, so this is why this is empty. And as we're going through the process of consolidation, which may take many, many months, I'm simply bumping these numbers around until I can lock in a few numbers. So these numbers are also still in process because if we lose this 34.53, you have to reevaluate where you end up at. Okay, so we have some retracement possibilities that could still make wave 3 valid. Okay, and until wave 3 completes itself, you can never validate it. So it's that clear. We'll be able to validate it at some point because I'm pretty sure wave 1 is now validated. So that's the fundamentally how you use this. You're using up and down moves intraday, weekly, monthly, or yearly. However you want to use these numbers. You can actually put the beginning of the stock market into one cell, where we are today, and then try to fit the entire annual or the entire history of like the S&P 500 into an Elliott wave, because there's macro versions and micro versions. And I want to make this clear. I don't want to take anything away from guys on YouTube like Trey and Matt Coors and these guys. I follow them. I don't watch a lot of their videos, but I know that they are very good at doing technical analysis. And some of the people that I follow on Twitter are also very good at it. So this is a very simple technique. Like DiverSK is always about simple. A simple way to do it so that you as a beginner can get a good feel for how to do this work. Okay? So that's all I wanted to say on this little interlude, and then we get back to the video already previously made. So as you're trying to fill this in, you're simply trying to match the moves. And there again, you have to study the pattern of this chart, showing all of these things that are happening, and you got to just simply do this. You got to do it, and this is why do we do it on a spreadsheet? Because that engages you. You get engaged into the stock. You're figuring it out. You're putting the numbers in yourself. And the only way you're really going to get to feel a stock is when you yourself try to figure it out. So I really only want you to understand the spreadsheet because it's so fucking simple. When these guys show you on YouTube this fancy chart with all these lines on it, you don't got a fucking clue what's going on with the Elliott wave. You need to get into the formulas, get into the Fibonacci numbers, and do it yourself. And I don't give a fuck if anybody ever watches me again because, I'm telling you as it really is. And you don't really want to do that much work, because if you don't want to do that much work, you're not going to make any fucking money. It's that simple. You want to make money at this, you got to put the work in. So back to the spreadsheet. Over time, this has now developed for 10 months. over time, I handpicked these numbers. I changed them. Back and forth trying to analyze it. Where are we? Are we on the 1 up, 2 down, 3 up, 4 down? Look here. I got 1 up, 2 down, 1 up, 2 down, 1 up. I still think we're in the 1 up, 2 down phase because mainstream media is still negative on AMC. So, until we get somewhere where the news is positive, you ain't even halfway to the fucking MOAS. This is what I like about it. You know, I'm trading options. I'm selling options. I made $4,000 in October. Tweeted that today. I just keep making money every month selling options against this stock because I see on the Elliott Waves that we're not there yet. Okay, so we will get there, and I'm not going to tell you when. I don't know because we're in the 1 up, 2 down, 1 up, 2 down. When mainstream media starts talking about how positive it is, and when I see Reddit start jumping by the thousands again, right now it's about 1,000 a week gains in new members. When I see that jump to 2, 3, 4, 5,000 again in a week, then I know maybe we're going to start hitting 3 up, 4 down. And meanwhile, I'll just simply be selling options, making money every month. Okay? It's that simple. So I'm going to do a Twitter space call. And if there are any questions about how you do this, I'm happy to answer them. But, if you look, you take a screenshot right now if you're watching this video and study these, formulas. I'll go along here real quick. Here you enter in the bottom price. Here you in the top. And these are the bottoms and the tops of major moves, okay? That calculates the difference. This calculates 0.786. It's just multiplying times this value, and then the same thing here. This takes the 62% retrace. This takes the 38% retrace. This takes the 23% advance. 23%, 23% retrace, 23% advance, 38% advance, 62% advance, and 78.6% advance. Simple spreadsheet. And I hit the fucking number today within 1 penny. So do I think it worked? Well, it works pretty good for me. I don't know about anybody else, and I don't have any fancy software. I just have the spreadsheet. But I used it, and I got to show that again because here we did it. Where are we? We're on the chart for 3 days. Let's look at today. Here we are. Here we are trading at right in there, 34. I hit it within a penny. Come on. And then I closed my... I, what can I say? I don't know what to say. Just, it works. It doesn't work every time. And why? Because nobody can predict when a whale is going to jump in there and buy stock. Nobody can predict when a hedge fund is going to come in and short the shit out of it. But when things are in general flat and normal with low volume and shit like that, you can trust this stuff. It works really well. And if you're selling options, you can pick these price targets to enter your trades. That's the key. So right now, I want to show this before I quit because hopefully this video will come out in the next week or so. So at this move, we had the 29 to 84 to 51.69 move. I think that started around 4th of August, okay? So the retracement on that was 34.52. And today, which is October 29th, we hit 34.53. So then you could say, there's your advances. Okay, so we should go back to 38.14, 43.39, 46, 56, 59, 65, 68. That's what should happen. So you can pretend like that's going to happen until it don't. Okay, and you can follow people on Twitter who are much better than me at day-to-day stock analysis, because I don't have time to do that. But in general, this is how I plan my trades. I'm looking at all of this stuff, and I'm trading, selling puts and calls and everything based on these numbers, and basically that's how I do it. Anybody who's asking me on Discord or on Twitter, this is how I do it. Everything surrounds this. In my opinion, as JP Merck says, I'm the Elliott Wave King. And I don't even have software to do it other than this stupid spreadsheet. But, I've been doing this for 22 years, and I make a lot of money at it. So I hope that I can help anybody. I'm almost dead now. I'm so old. And I might as well let some young guy make some money off of it. You guys do the best you can. And this is my theory. And I will do a space call in the next few weeks. So maybe, it's coming up on November. I don't know when you will watch this video. It's coming up on November. But at some point, I can do a space call and answer any questions, because this is simple and there's absolutely nothing that couldn't be answered simply about it. So all the best, and Diver is signing out again.